It's a bull. Speaking of bull, there's a bull shark. I don't think it's a bull shark, I'm not sure, but good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Got the a live cam up, but it's not a Florida live cam. I believe this is off the coast of North Carolina. It's a live cam, kind of like the shark cam. It's off what they call Frying Pan Tower, which is miles offshore North Carolina, famous fishing area. But wow, take a look at these guys, man. There's a whole bunch of sharks down there. Anyone know what kind of sharks these are? Please make a comment down there below and let us know what you think they are. Kind of a cool little trivia thing. But you can watch this any morning if you like watching sharks. It's called Frying Pan Tower. Shark cam provided at explorer.org, and it is a live cam, so it's kind of cool. Well, let's take a look at spot prices here. Holding their own. Looks pretty damn good to me. Looks like the sharks really haven't been able to tear us down. But not too bad. Using a shark as a reference here. Sorry about that. We'll leave the sharks alone. Let's take a look at the market today. I was expecting a lower market. We had an overnight market. So it looks like a low of 1850 and a high of 1866. Currently sitting at 1861. Silver, again, holding on to that $25 mark, occasionally dipping down a little bit, but not staying there for long, apparently. Looks like it's kind of been pumping back up in the evenings, not to any crazy degree, and the graph isn't showing like a yo-yo type 45 up and 45 down, but gradually it seems like the overnight markets are kind of slowly strengthening, even when we see down days in New York here. Let's take a look at $25 silver, currently a low at 24.83 and a high at 25.21. Again, kind of range bound, which is a good sign for us. Platinum down a little bit, 1,065. She was nearing that 1,100 mark earlier in the week, so but still, overall, it's up from where it was yesterday. In palladium, who cares? Let's take a look at the price action as far as the charts go, the overnight charts, and see where most of the action was with gold here. Looks like that's yesterday here. Okay, here's yesterday's close right here. Let's see. Well, actually, yesterday's opening, and that would be the close right here, the red line. And then last night, New York closed, I believe. And then last night, it would be right here. Well, actually, New York would have closed right here. Sorry about that. And then this is the continuation of this morning right here in the overnight markets. And not much going on. Gold kind of range bound, 1855, 1860s. It was higher obviously yesterday, and as you can tell, the smackdown occurred during the New York NYMEX market between 8:20 a.m. and looks like kind of extended past that noontime period into almost the what was it? Let's take a look here. What market or about what time? Yeah, about 1 o'clock or 2 o'clock. It kind of started steadying off Eastern time, our time on the East Coast here. And it looks like silver did the same thing. There's good strength, though, here, folks. They're trying to knock it down, but it's not staying knocked down for very long and kind of popping back up like a Weeble that wobbles but doesn't fall down. That's what gold and silver is. They're Weebles. They wobble, but they don't fall down, and they never will fall down, unlike a lot of other investments, whether it's stocks or cryptos or whatever, even currencies. They weeble. When they wobble, they have a chance of falling down and not getting back up. But if you think about it, gold and silver is the ultimate weeble because it does get knocked down, but it gets right back up again. It's been around for 5,000 years. Really, ultimate weeble. That's what we're going to call it. And silver, the ultimate weeble. Let's look at silver 24-hour bid. Same thing. If you take a look at yesterday's market, there's where the hemorrhaging occurred. And God, that line could very similar to the gold market or the gold price yesterday as well. Started to level out about the same time again as gold did. When gold started to level out, so did silver. And you can see that right here. The charts almost look identical to some degree. And let's take a look. Same thing, started at 8 in the morning and continued throughout the day yesterday. This morning it looks like it's kind of choppy sideways action. Now silver's down, it looks like a little bit from earlier morning. Looks like it was in that 25.10 range. What is it doing currently? Let me just do a quick update right here. Here, wrong update. Let me do the update over here. 25.09. Again, sideways, holding on to that $25 mark. Looks good. Let's see what happens for the rest of the week here. I'm kind of curious. Let's take a look at ZH, see if there's anything out here. There was an article on gold I want to read you real quick. That was pretty darn good. And where did that go? Let me just kind of squeeze down here, and we'll talk about some other things. Gold probes multi-month highs as inflation drives investors' interest in haven assets. Interestingly enough, this was done by Tom Ozimek, the Epoch Times, interesting newspaper. I forget who runs it, but it's an interesting story behind that whole newspaper. Surging inflation has pushed gold prices to near 5 months high, with Credit Suisse analysts predicting a more sustained move higher that could see the Haven metal attempt to break out beyond its 2075 record high. Now, for you silver folks out there that aren't so much interested in gold, again, you've heard me repeat myself over and over for the last couple of weeks that you really need to follow the price of gold, because that silver will follow the price of gold. If gold goes up dramatically, silver may lag a little bit, but it will definitely follow the price of gold. And I kind of think that the action that we're seeing in the silver market right now is being driven by higher gold prices. I really do. I've got no data or anything to back that up, but it's just a kind of a gut feeling of mine. And again, follow the price of gold. I mean, silver will follow the price of gold here. Spot gold prices rose sharply on November 3rd, the day policymakers capped a two-day meeting by saying that they would start tapering their massive asset buying program, which is nonsense, because what would they say? They're going to reduce the tapering by $15 billion a month, and what are they spending currently? $120 or $130 a month. I guess that's tapering, but that's just kind of jawboning more than anything, and trying to make it look like you're doing something. You know, like the guy at work that never works hard, he always just looks like he's busy. That's what the Fed is doing with this tapering, just giving the appearance that they're busy. Because most people don't know, most people don't understand it, most people don't care. Most of the public, when it comes to politics and economics, is completely clueless. Their entire education on economics exists either on Fox News or CNN or MSNBC, one of those three. And that's, believe me, these people vote too. Let's move. Sorry about that if you listen to any of those channels, but that's the way I feel about corporate news. It's bullshit. On November 19th, the Haven metal was hovering around $18.60 per ounce mark, not far from its 5-month high, with the recent leg up suggesting investors are betting that the current inflationary run up will continue for some time. Okay. Gold continues to improve steadily and has now cleared key price resistance from the July and September highs and downtrends from August 2020 at $18.34 to establish a 5-month base, Credit Suisse analysts wrote and cited by FX Street. With the market also above rising short, medium, and long-term averages, evidence looks to be building that we may be at the beginning of a more sustained higher move. Do they really pay these experts to say this kind of Credit Suisse analysts? Wow, man, I need that job, man. I think I could do a better job than that. Really, we may be at the beginning of a more sustained higher move, a move higher. Oh, give me a break. We've been in the period of a sustained move higher since 2016, and that's what I'm talking about, folks. Most people wouldn't recognize a bull market in gold if it bit them in the ass, including the so-called experts like the Credit Suisse analysts that wrote this bullshit. But anyway, let's take a read of what else they say. And again, this is where corporate media and most people get their news from, is people like this. Credit Suisse analysts said they expect gold to continue its bullish tendency and test a June high of 1917, with a breakout above the level, adding further weight to our view, with resistance seen at 1959 and eventually back to the 2075 record high. Okay, I like that. Inflation concerns have also sparked interest in 30-year Treasury inflation-protected securities, whose yield on November fell to a record low of minus 0.57%, though it has since recovered some ground to minus 0.51% as of November 12th. While Fed officials have maintained that the current bout of inflation is transitory, transitory my ass, and actually, folks, the idea that that this inflation is caused by the critter from the critter 19 from 2020. The idea that critter 19 from 2020 created this inflation is the scapegoat. I've been telling you that for a while. Inflation has been happening for a long period of time, slowly building since we got off the gold standard with Nixon, when Nixon finally said we're all Keynesians now in 1971 or 72, whenever it was. Inflation has been rising ever since, and we know it. We all see it. Anyone that actually goes to the grocery store saw it, and it happened before 2020. All we're seeing now is an acceleration of this, okay, an acceleration, and it's quite natural. But here's the beauty of it. In my show yesterday, I said that the 2020 critter, the 2020 19, or the critter 19 2020 is going to be the scapegoat for the failure of the system, or the fall of the system, and the great rise of they're not going to blame themselves. Government and politicians aren't going to say, hey, listen, it's really our fault that you're seeing heavy inflation now. It's really our fault that the economy sucks. It's really our fault that the political situation sucks. Same thing with the Federal Reserve. Now, the Federal Reserve, they're going to make money whether the economy takes a dump or not. They'd rather have a good economy. They make more money, but they're going to make money regardless of whether. The only way they stop making money is when the system completely fails and stops, all right? So they'll continue this charade as long as they possibly can. And the Fed loves this. The Fed loves the Critter 19 as well. You know why Fed loves Critter 19? Because, boy, the Fed is actually the one driving the entire ship to hell, okay? They're the captains in charge of this Titanic called fiat dollar, the fiat dollar. They're in charge of that Titanic. And all the Critter 19 of 2020 did was provide them a great excuse. Well, you know, if it wasn't for the 2020 Critter, you know, the Critter of Critter 19, I'm making a new name for this just to kind of fool the algos here, I think. Maybe that's what I think. Maybe they're smarter than I think. But Critter 19 is going to be a great excuse for the central bankers to use all over the world and politicians all over the world. It's the scapegoat. But the truth of the matter is, folks, it's not. That all that did was kind of accelerate things a little bit more, close things down, as accelerated. It might even slow down the decline of the dollar and slowed down the decline of this greatest bubble of all time, or I should say the implosion. So Critter 19 may have been a plan to kind of slow down the whole implosion that we were about to see. We were in trouble before Critter 19 came along, folks. But again, going to be a great scapegoat for politicians all over the world, officials all over the world, and especially central bankers. Let's read the rest of this here. While Fed maintained that the current bout of inflation is transitory, will abate once supply side disallocations are smoothed out, Fed Jerome Powell said at November 3rd press conference that central bank's idea of transitory has evolved as upward price pressures evolved. That's a nice way of saying they're wrong. Have turned out to be more persistent than previously thought. Here's what Fed Powell says. Really, for us, what transitory has meant is that if something is transitory, it will not leave behind it permanently or very persistently higher inflation, Powell said, adding that it is not time yet to raise interest rates as there's still ground to cover in terms of labor market recovery. And, you know, again, this is just the Fed jawboning, Powell jawboning. You know, they've been in charge of the Titanic for a long time. The only thing that Powell and anybody that's running a central bank can do, you know, because again, they're headed towards failure. They all are. The ship is sinking. The Titanic ship is sinking. So the best a captain can do in that situation, where he knows the ship is failed, the ship is doomed, is just try to keep the passengers comfortable. All right, and that's exactly what Powell and central bankers all over the world have been doing. Is they've just been keeping the passengers comfortable. You know, and that's what PPE is, and throwing you some extra money and throwing money at you personally. Instead of bailing out their friends this time, you notice they threw a little bit of money at you at $1,300. You know, they may have stopped you from being evicted. They may have. That's the heroin. that's actually the painkillers that they're giving the passengers, so they don't recognize that the water is rising up to their necks. So, you know, the best a central banker can do today is just jawbone everyone and keep them comfortable before the ship goes down. You're all going to die. We're all going to die, I should say. Not really. People that own gold, silver, and precious metals are going to do quite well in this so-called transitory inflation. And if you think about it, I say this over and over, most of you can probably repeat this phrase for me, what do central banks own? What do they covet? They don't have cryptos in their vaults. They don't have dollar bills in their vaults. All right, well, they do print it at the treasuries, but they don't have, the Fed doesn't, and central bankers don't keep dollar bills, crypto. They don't keep diamonds. What do they keep in their vaults? Gold. What do they keep adding to their position? Gold. Why is that, folks? Because they know the truth. They know what gold really is. That's why the smartest bankers in the world fill their vaults with it. Okay, think about that for a moment. Try to come up with some other reason why they put gold in their vaults, other than the fact they know the true value of it. Okay, if someone can tell me that they put it there for any other reason, please make a comment down there. I'd like to see that. Former Treasury Secretary Larry Summers, who was early to sound the alarm on the current bout of surging prices, said in a CNN interview last week that he believes the labor market is tight and loose. Monetary policy is counterproductive. Yeah, Larry, thanks for doing something when you were involved. We've got to recognize our problem is not that not enough people have jobs, Summers told the outlet. The current problem is that we are pushing demand into the economy faster than supply can grow, and that we are just going to get more and more inflation until we stop doing that. That's the real problem, and I would disagree with them there. Unless the Fed makes significant changes to a policy or an accident delivers a major disruptive blow to the economy, it's quite unlikely the rate of inflation will fall back to the central bank 2% target in the foreseeable future. 2%. We all knew that was a lie when they started talking about 2% anyway. And the other thing is the CPI. We've known that they've changed the CPI numbers over and over since the 1970s to reflect a better CPI than what reality is. This helps them keep selling bonds and treasuries, and why they do this. But the real rate, and I think someone said if they figured the CPI the same way they figured it in the 1970s, when it was probably more to the honest side, the number was on the CPI, we'd be at a 15% rate using the old calculations. Now, I've not fact-checked that, but it sounds about right to me. I'm sure we're at a minimum 15% inflation. The CPI is full of shit. Let's move along here. And Summers says hold on one second. The Fed has responded to surging prices by announcing a rollback in the pace of monthly asset buys. Blah, 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 blah. At their most at their most recent policy meeting at the beginning of November, Fed policy makers voted to taper their it's 120 billion in monthly asset purchases, buying 10 billion less in treasuries and 15 billion less in mortgage-backed securities. Come on, folks, it's still over $100 billion a month. This is what I'm talking about, jawboning everyone. This is this is what makes everyone feel more comfortable. Oh, the Fed's fixing it. The Fed's working on it. No, the truth is, folks, they're just lying to you so you don't panic. That's the truth. The last thing the captain on the Titanic wanted to do when the ship's going down is make the passengers panic. So you sue them. Remember the movie where they started playing the violin on deck? So that's exactly what the Treasury is doing. They're breaking out the band. They're pulling out the band and they've been doing it for a little while. This is what all the jawboning, prior to 2008, you never heard much from Fed people. They were pretty damn quiet. Now they're like rock stars, okay? All right, let's move along here. Summers said that that's not fast enough. If they started by saying that they were going to stop immediately buying mortgages in the midst of a major housing bubble, that would be helpful. He said, adding that surging house prices have yet to be reflected in the headline inflation numbers. Wow, that I didn't even know. Wow, okay. If they said they were going to stop growing their balance sheet, not reduce the balance sheet, but just stop the process of growing it, if they were going to get that done in 3 months rather than 8, that would be helpful, he said. I think the Fed has made significant mistakes in the approach that it's taking by doubling down, you know how I always say doubling down on stupid, doubling down on the massive fiscal stimulus that we had at the beginning of the year with really easy monetary policy. Well, folks, and again, the reason Larry's bringing this up, but he wasn't much help when he was involved with the Fed at all, and he's right. They are making a mistake, but what they've got to do is they've got to, if they don't do this, if they don't say that they're tapering, and if they don't, if they did really taper and raised interest rates, that would create a world of pain. And the truth is, folks, sometimes you got to go through the pain to get fixed, to fix yourself. You know what I'm saying? It's like resetting a bone that's kind of somewhat healed. They're going to have to break it. Now, fortunately, we've got ways to kind of make the pain not feel so bad with painkillers, but there's still pain involved to get healed. And that is what they've been unwilling to do since 2008. The Federal Reserve, politicians, they've been unwilling, politicians especially, because it'll cost them votes, but the Fed has been unwilling to create the pain that is needed for us to heal, all right? And that's the truth of the matter. And maybe they just understand there is no healer. Maybe they understand that, like all fiat currencies, the US dollar is just doomed to failure, and they're doing their best not to panic the passengers, as I said. What else is going on out here in ZH world? Let's take a look here. I'll make my little snide and smart-ass comments as I go. And kind of interesting to see what's going on here. I'm really surprised that Tesla has been able to get away with the self-driving thing. And I'm ambivalent. I'm not quite sure I would trust it. I wouldn't trust it entirely myself. There seems to be issues with it, but he kind of just rolled that out without any kind of government entity saying it was okay for him to do, which I think is really cool, because what I'm learning in life is don't ask the government for permission, just do it. And then if they catch you doing it, just, when it comes to that kind of stuff, when it comes to stuff that's in the gray area, just, it's like Uber. I mean, who the F would have thought Uber could have survived? You know how many years that the cab companies had a solid hold on cab rides? Like New York wouldn't allow any other cab company. You had to have a medallion. All of a sudden, Uber came along. They didn't ask New York City for permission. They just created the app, just started, and became such a powerful entity. There was not much that the city or states could do about Uber, okay? Some countries did. They just banned it outright. But no less, what Uber did is they didn't ask for permission. They didn't say, hey, we're going to roll out this app. What do you think? They just rolled it out. And that's exactly what Tesla did with the driving, the self-driving thing there. However, again, I don't think the technology is quite there yet. From what I read, there's not enough sensors on these cars to be entirely effective, and the type of sensors they have don't catch everything. Hence, you're seeing people driving under trucks. Joe Rogan, I like Joe Rogan. I think he's the average Joe. I really believe that. Joe Rogan, kind of the average Joe. It's kind of interesting to watch him sometimes when he's figuring out things, like, oh man, they are screwing me, or oh man, corporate media is a bunch of BS, all right? But this is true, and this whole deal, what a shame on this whole deal right here. This kid should not even have been in jail. And if they convict him in any way, shape, or form, I think that the DOJ and judges all over the world are going to be in a world of shit, because people aren't going to trust them anymore. I mean, they're having a hard time trusting them as it is. All right, the justice system, when that starts to fail, this country is really fucked. U.S. housing starts tumble for second straight month as home buyer sentiment crashes. That's another bubble we are in the greatest bubble of all times. The G boat, as another author would put it, Charles would put it, the greatest bubble of all time, and home prices are just freaking insane, folks. I mean, our prices here in South Florida are getting almost like California-like. I had a friend of mine in Ventura, California, sold his home for nearly $750,000, and his house was quite small. Humble first, which is him and his wife, but very small home, and that brought almost $750,000, and nothing special about it. Older home, older appliances. It just brought crazy dollars, and we're starting to see that here in South Florida. I suspect we're going to see a crash. Again, greatest bubble of all time. When it finally takes a big dump, everything across the board is going to happen. However, I got a sneaking suspicion that maybe bankers, probably not, but maybe that this market crash that we're going to see is going to be a slow, kind of like it's going to be planned out. They're going to slowly drop this market. They're going to slowly try to drop the Dow. They're going to slowly try to drop all these home prices over time, rather than one giant 45-degree line straight down. That's what I'm kind of thinking. I think that the central bankers and the powers to be, when it comes to this kind of stuff, are doing everything they can to prevent a immediate crash. So what I think is we'll just see a slow crash over time. That's a very possible thing. Let's see. Stocks suddenly slammed as yield hits 1-month high. American largest pension approved. Futures flat. Nothing really good here for the economy overall. Surviving the off-the-charts bull markets. Wall Street bonuses set for biggest jump since credit crisis. And we just read that article right there, so we'll keep moving down here. All right, nothing too much to talk about. Let's move along to, war is never good. And let's move along. Gosh, go figure. Let's take a look and see what's happening in gata.org. Great article here, just popped up. 3 banks paying $50 million to settle antitrust claims that they rigged the London gold fix. Folks, for years and years and years, CNBC, all these mainstream corporate media giants, whether it was magazines, Bloomberg, or whether it was the online, television, CNBC, whatever. They all denied that manipulation in the gold markets were happening. They all made fun of it. Oh, put your tinfoil hat on, is what we were told for years and years and years. When many people, including GATA.org here, we're saying, hey, these markets are rigged. There's something happening here. We were called conspiracy theorists. You're conspiracy people. Put on your tinfoil hats and go away. The truth of the matter is they're not saying much now because for the last several years, and including Goldman Sachs, I think it was 2018 or 17, when did they have to pay the big fine and get caught? Was it 19? I forget. So they got caught doing it outright, paid a huge fine for manipulating gold and silver markets. And we have a couple other banks that did it too as well. I think one of them was, who was it? One of the German banks for sure, and I think that's might be this deal right here. And some other banks got caught doing it as well. So let's say Barclays, Societe Generale, Scotiabank, and London Gold Market Fixing Ltd. will pay a combined $50 million to end antitrust litigation over an alleged scheme to rig the gold fix. Hold on, let's take a look at this. This is perfect right here, folks. Look, too big to jail, all right? They're paying a $50 million, which is nothing, $50 million to end antitrust litigation, all right? So they're paying these people off to end the litigation and the proof that they are fixing these markets. Oh, wow. God, that's just priceless. That's fucking priceless. The traders leading the lawsuit sought preliminary approval for the agreement from the judge. All right, so whoever sued them, Deutsche Bank, gosh, that's just, let's see if we can read any more of that. It's on Bloomberg. I wonder, nope, I got to log on and I don't have a subscription to Bloomberg. I'm sure we can find it somewhere else out there. But look at this. They're paying off the litigants just to go away, which is, that sucks, man. In fact, they should be jailed. These people should be jailed, folks. It's not just fined and not just paying people off. And $50 million is a pittance. That's bullshit. These people should be in jail for sure. No doubt in my mind. That's just scum. I'm not even gonna. God, that just pisses me off. All right. 3 banks paying $50 million to settle an antitrust. They shouldn't be paying. They should be paying $500 million and be doing jail time, not paying $50 million to make this shit go away, folks. This is what pisses us off right here, and and this is where never mind. I just go off on a rant. Seeking Alpha, as you know, there's some good articles out here I recommend you guys read. Gold seeks clarity amid again, you can read this for free. Just go to Seeking Alpha, go to markets and gold and precious metals. Not too much I'm going to read today because I don't want this to turn into a 2-hour show. But again, this is your homework for, you should put this on your bookmark bar, and this is your homework once a week to be reading Seeking Alpha, the Gold and Precious Metals Report. Also, AIER is your homework, folks. I hope you don't mind me giving you homework. My attempt here is to not just give you something every day, but help you find it for yourself, all right? That includes making you a smarter than the average bear, all right? All right. Good articles here on AIER. That's a good one. The stories from a decentralized short squeeze, I believe, and everything Nancy McLean doesn't like is a conspiracy theory. We were just talking about conspiracy theories. As far as news goes and being a smarter person, this is one of my favorite websites to read, folks. Highly recommend that you put it on your bookmark bar. Let's take a look at what's going on out at the Reddit world. And as I always say, I appreciate the Reddit members and the Reddit forum people that run this show for allowing me to put my videos out here and tolerating my opinions. I appreciate that very much. And let me just kind of take a look out here and see what is going on. And let's see the new stuff. I like to see people posting their memes and things. We'll just stay here for a moment, folks, not too long. And if you're not with on WSS, Wall Street Silver, I'd recommend you go on there. It's a lot of enthusiasm, a lot of cool stuff. And let's see what people are buying out there as well. No, I can't see that. What is that? Graceland, £1.999 silver. And I wonder what he's paying for that. Well, we're going to get over prices here in a little bit and talk about what I think the best deals out there and what the worst deals are. Let me see if I got my sheet here. Hang on one second. Saw it over here. I didn't grab it earlier. Well, anyways, if you're not a member of Wall Street Silver, and you're not an ape, or what they call a silver ape, I recommend you go out here and sign up. It's really cool, and there's a lot of cool information out here. Well, before I go into my video today, and let's move over to or yesterday's video and answer some questions. What's the best deals out there right now? Product availability still seems to be okay. There's delays in some products, it seems like, and the usual products that are too much money are still too much money. Right now, Gold Eagles, you should be probably paying no more than spot plus $122 per ounce. 1/10, quarter ounce, and half ounce Eagles are just prohibitively expensive, folks. I would avoid them like the plague. If you have the desire to buy fractional gold, stick with, go buy Austrian 1 ducats, go buy French 20 francs or 0.1863 ounces. Go buy sovereigns at 0.2354 ounces. That's the old school fractional stuff. Prices are far cheaper than what you have to pay for gold or Eagles or maples in the 1/10, half ounce, and quarter ounce sizes, which are overpriced. So avoid them like the plague. What's a good deal out there too? It looks like maple leafs, gold maple leafs. Availability is a little spotty occasionally, but maples you should be paying no more than spot plus $90 per ounce. That's a good deal right there. Over that, I wouldn't recommend it. Krugerrands, I believe Krugerrands are delayed right now. There's shipping delays on Krugerrands. They're out there. We have them right now, but my understanding is I talked to a few big wholesalers out there, and they said they are waiting for shipments of Krugerrands that have been delayed, and they're still waiting for them. They're supposed to be in this week, I thought, or last week, and they're still not. KRs are going to run you about the same as maple leafs, spot plus 90. And I like KRs. They're recognized all around the world. The only reason I don't like maples too much, they're just so soft and they scratch easily. And then once they scratch them, everybody complains about it. I don't want that. What's going to scratch on it? So as a dealer, I'm giving you some of the things that I don't like. Well, what else as far as gold? I kind of stick with those products right now, folks. Best deals out there are going to be, and gold bars. Gold bars are still a great deal. You can pick those up for spot plus 45, 80 bucks, spot plus 80 bucks, which again, I think is the best deal out there. It's 10 bucks an ounce cheaper than Krugerrands and maple leafs, and quite a bit cheaper than 22.42. Yeah, 42 bucks cheaper than a gold eagle. So more or less, you could buy a 1 ounce gold bar and a silver 1 ounce and get change for a burger and fries for the same price you could get gold 1 ounce Eagles for. As far as silver goes, I'm going to play this while we're talking here. He's a cute fella, isn't he? Give you something to look at. Silver, best deals out there are still 100 ounce silver bars at spot plus $3.25. You shouldn't be paying more than spot plus $3.25 for 100 ounce silver bars. 1 ounce bars still available out there. Seems like availability is not too bad. Spot plus $3.75, and 10 ounce bars, a little delayed delivery on some 10s out there. Spot plus $3.50, no more than that. Avoid silver eagles like the plague. One of my favorite products as far as beauty goes. They're beautiful, they're large, they're in charge, but the problem is the price is just ridiculous on them. The premiums are ridiculous on silver eagles. You'll never get it back either, folks. That's for sure. Give me 1 second here. What do we got going on here? That's me doing something here. We'll get down to the question marks down here. Let's see. Oh, hold on. I got a little confused by the hand moving around the screen. I thought someone had remoted into my computer. Sorry about that. Silver Eagles overpriced. Silver Maples. It looks like there is delay on silver maple, and that's starting to dry up out there. I think I still got silver maples, and they're under $5 while they last, while I have them. But avoid silver eagles again, folks. Just too much money. What other deals? 90%. I was promoting 90% for the longest time, but my God, the premiums on 90% are almost as bad as silver eagles. So avoid 90% like the plague if you can. It's just too much money. In fact, remember when I was telling my people to go out and buy, telling you peeps to go out and trade your silver eagles for 90%, and you'd get more silver. Lucky enough, you can go trade your 90% now and get even more silver. So this is the deal that keeps on giving. 90% premiums. You could probably trade your 90% with your local dealer and trade them for maybe 100 ounce bars or some other cheaper silver products. And not cheaper as far as quality goes, but cheaper premium. And walk out with more silver in your pocket. Again, this is pretty cool. And I'm glad I'm able to point this out to some of you folks that have taken advantage of this as well. Well, let's take a look at yesterday's comments on yesterday's video, which was, oh, I got it running here still. That's why. Oh, there's the manatee's eye. That was the live manatee cam yesterday, and it wasn't here in South Florida, but I thought it was cool enough to put up, like I did the shark cam today. Let's take a look at some questions here. I'm going to go down to sort by newest, and that should be okay. And I'd like to thank all you folks. By the way, if you're new to this video, please hit that like and subscribe button. I appreciate that. Hey, Lou, what's going on? Switch says, is there a bull on both sides of the coin? It's always a bull. It sure seems that way. This one coin just pulls up bulls all the time. You know, truthfully, I think it's just talking about long term, not the daily markets. If that's the case, it would be correct most of the time. Thanks for watching, Switch. Brian Peterson, same as me. I like the manatees. They're really cool, gentle creatures. People profiting. Yep, that's true. Hey, Joey, what's up? And AC Taylor. I hope prices get monkey hammered to Friday because I'm going down. Hey, I can't blame you. You know, if you want to buy, you want prices to be down. You know, buyers want prices to go down. And again, when these prices get, you know, monkey hammered like they do occasionally, it just provides a good opportunity to buy the friggin' dip. We are in a long-term bull market, started in 2016, and I think this bull market has still years of legs on it, folks. Trust me. So you get the opportunity to buy the dip, buy the dip. Cocoa Puff, the critters a puppet to the private Western Central Banks. Thanks for watching, Cocoa Puff. I appreciate that. Own nothing to be happy. And thanks for watching. Food Hoarder says, I really appreciate your decision to include political discussion. I thank you. I think it's very important. I think that politics and economics plays very much into gold and silver. And, you know, it's just, you know, you need to discuss it. That's just my opinion. The problem with discussing it nowadays, if you say the wrong thing, your videos will get like no view counts. Let's see here. Charles says you should really do a video on owning physical assets, i.e. precious, within your IRA. You actually own these assets. Oh, Charles, you know, I said yesterday, again, I don't like ETFs, I don't like Sprott, I don't like any of them really because I like to hold it for myself. However, it's absolutely true, you're absolutely correct. If you have an IRA or it is beneficial for you to have an IRA, then yeah, there are good ways to do it. I've heard some people that are able to hold their own gold and silver and not do it through someone else. My understanding with an IRA, you had to have someone else hold your gold and silver, and it has to be proof gold eagles or something with boxes certificates. Crazy stuff that made it more complicated. But I'm sure there's easier ways to do it out there. But again, Charles, you know, for me, IRAs don't really benefit me too much. There's a limited amount I can put into it. I suppose I could write off something, but I'd just rather have the money in my hands. You know, you just don't know what they're going to change with IRA rules down the road, especially as governments get more broke and broke. Again, that's my opinion. And IRAs, listen, if I had to have an IRA, what would I want in? Gold and silver. But the problem with that is you got to make sure you don't get eaten up by the fees like I did with my Sprott account. Hey, thanks for watching, Charles, and you're absolutely correct. I agree with you on that as well. My point wasn't to you know, put them down. My point was I just don't really use them. I'd rather hold the stuff physically. Ernest says, everybody's joking about the monkey hammer. It's fraud. I guess we have a lawless country. Yes, sir, we do have a lawless country to some degree. Not lawless, it's just that the law applies to some animals and not to the other, not to other animals. Some animals are more important than others, apparently. So, you know, too big to jail, too big to fail, or too big to fail, too big to jail. Celeste says, I see a black swan coming. Black coming sites 15-20% now and 80% by next February. And we'll see what happens here. I think we're well protected with this. Again, buying gold and silver. MG Toe, Maddie says an ounce of gold, 2,510 gallons of gas, 3,000. No, not necessarily. I think that's hyperinflation, sir, and we know what hyperinflation. Hyperinflation is when prices go up 50% on a monthly basis. So, for example, if it costs you $100 to fill up your gas tank 1 month and it's $150 the next month and $225 the next month, that is the true definition of hyperinflation. And trust me, if 10 gallons of gas is $3,000, that probably means gold is going to be $25,000 an ounce. I don't see that. In fact, $2,500 an ounce gold to me sounds really cheap, given the fact that almost every other commodity and every other asset out there has just gone right through the fucking roof, including real estate, you know, everything but oil and some of the commodities that we depend on a daily basis. Food's gone up, schooling's gone up. So, I mean, come on, give me a break here, Marty, or Maddie, I'm sorry. I don't mean give me a break, and I appreciate you watching, but no, that's not the case here. Gold, if I saw $2,500 gold right now, you know what I'd say to myself? God, that's still cheap, all right? And I've been doing this for, 30, 40 years or something like that. So not the case, sir, and I just keep hanging on to your gold. You are going, unless you plan on dying the next year or two, I guess we never know, but unless you plan on dying the next year or two, Maddie, hang on to your gold. I believe you're going to see $2,500, and I don't think it's going to be too far off in the future here. And when you see it, it's going to be real quick. It's going to run up real quick. John Gordon, hey Mike, what's up? John Gordon, why or how can silver prices rise when it's a fake price mechanism that is also rigged? John, if you've been watching my videos, you'll know that they can only do it for so long, and right now I actually think that the silver shorts are getting monkey hammered themselves right now. So, I mean, look at the price of silver. They keep trying to drive it back down to that $24, $23 mark, and not with a lot of success. However, again, as I've been saying, I think this is a case where the gold price is legitimately going up to where it needs to be, which is above that 2,000 mark. You know, I think gold should be at $2,500 right now, and should have been at $2,500 a few years ago in that range. Again, if it wasn't for the monkey hammering and the artificial price structure that we have, or the way we come up with prices and the shorts hammering these markets, we would be, I'm sure of it. But no less, just keep hanging on and don't worry about it. You're going to do fine. Keep stacking your gold and silver. Michael Rodriguez, precious metals will rise from the ashes. We've never been in the ashes. The only time gold and silver's ever been in the ashes is when the two neutron stars that created it, the Big Bang, happened. That's when gold rose from the ashes. Started out as carbon or wherever the heck it might be, and it rose from the ashes, and it's here to stay, and it's never going anywhere, Michael. So we're not arising from the ashes. We are just going through what I call the roller coaster ride to the moon. You know, you're going to have ups and downs, but the ultimate destination is to the moon. Thanks for watching, Michael. I appreciate it. Miami boy, hey, a Miami guy. Hey, thanks for watching. I appreciate it. $2,500 in the metaverse. I don't know what is going to happen in the metaverse. Yeah, I guess in the metaverse, like most people, most gamers, and most people that spend all their time in games, in fantasy, that gold can be whatever you want. Gold could be $25,000 in the metaverse. So, you know, when you're living in a fantasy world, it can be whatever you want, Miami boy. Thanks for watching. Tony Vink says investing in crypto now should be very wise. In some months you'll be a scat. Uh-oh, you know what I see right here? I see a fake person trying to promote cryptos. I guess we're going to have to erase that one. In fact, watch, I'll show you how I do it. Ready? No, I can't do it from here. All right. Oh, well. Well, I guess that's really about it for today. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. We're open 10 to 4, Mondays through Fridays. Call me anytime. We're a brick and mortar store, so we only sell here in the store, face-to-face. We do no online sales. However, we do advertise to be APMEX, JM Bullion, SD Bullion. It's pretty easy for us to do. Not only can we beat their prices for our local customers, we can also give service with a smile and great advice. Well, that's really about it. Thanks for watching. Have yourself a great day, and I'll talk to you tomorrow. Bye now.